Welcome back. You're with us on Trading Hour, and as promised, it's time to get down to the specifics of this big debate that's playing out in the paint space, whether it is all set for very big disruption and whether existing big players, and many of them are listed, whether they have more reason to worry. We'll have, of course, Abneesh Roy of Nuvama Institutional Equities joining us in the next couple of minutes. And as we say hi to Abneesh, I just want to put the stock price performance comparison up there for our viewers as well. Hi, Abneesh. Allow me to just, tell our viewers what the stocks have done. This is the start of 2024 till now. And the trepidation is really very, very visible. Maximum in Asian Paints, which is down 16%. Kansai Nerolac down about 11%. You've got Berger losing about 7%. And Indigo Paints, relatively better off, but it's lost about 5% so far this calendar year. And then comes the grasim splash with Mr. Kumar Mangalam Birla saying that that company, that's Opus Paints, that's the brand with which they're going with, they are targeting 10,000 crore rupees in revenue and profitability in the first 3 years of operations. So, Abneesh, great to have you on the show. This is a question that everyone is trying to find an answer to. Is it going to be very disruptive? And how much of this possible disruption, this hyper competition, how much is already in the price, considering the underperformance in paint stocks?
Yeah, thanks. So definitely, near term, we are cautious on the sector because of two reasons. One, of course, is all paint companies have taken a 4% price cut because of multi-quarter high gross margin. They have passed on a bit, but still gross and EBITDA margins are at a multi-quarter high. So you will see that although they will deliver, say, X% volume growth, the sales growth will be X minus 4, which means the overall sales growth for the sector in FY25 will be a bit muted. Second, of course, we were very impressed with the launch event of Grasim Birla Opus. So clearly, whatever can be thought of, I think they have done that. So that is really impressive in terms of 1 year extra warranty, in terms of tinting machine being 40% smaller and digitally connected, in terms of 10% extra grammage, etc. So those things are good. Plus, they have built up the second largest sales and distribution team. Now, coming to what will be the impact. So near term, the impact will be essentially ad spends will go up a bit. It's already very high. So if you see Asian Paint spends hundreds of crores on advertising, 4% of the revenue. So that could see some increase. Second is, of course, dealer incentives and consumer incentives. That will be a bit on the higher side. So we will see some margin squeeze in the near term because of that. But if you really see in terms of numbers, this is a 65,000 crore industry and growing at 10%. So if Grasim is aiming for a 10,000 crore number in FY28, so 4 years down the line, which means in first year, the realistic target to me looks more like a 2,000 crore. So on a 65,000 crore industry, 2,000 is just 2 to 3% kind of market share. See, in consumption and paints, that kind of a market share doesn't disrupt the other players meaningfully. Yes, as I said, some increase can be there in ad spend and dealer. Second is quality of distribution. See, India has got 1 lakh dealer shops. New paint companies offer tinting machine free. And then the issue is the dealer keeps the tinting machine at the back. India mein jo dikhta hai, wo bikhta hai. So if your tinting machine is there in the dealer shop, but not at the forefront, then that's a problem. Second is consumer and influencer is the key decision maker. See, in a painting, only 30% is paint cost, 70% is the manpower cost. So if Grasim is offering 10% extra grammage, it is 10% into 30%, only 3% cheaper for the customer. So if any consumer is painting his house from a 4 to 5 years time frame, will he base his decision based on 3% cheaper cost? No. He will be basing his decision based on trust, based on what the painter is saying, what the influencers are saying, architect, etc. But more importantly, distribution is also very important. But yes, coming back to Birla Opus, I would say that the initial launch seems to be good on paper. We'll come to know what's happening in the next 2 to 3 weeks when actual launch in the market happens. Currently, it's the inauguration of the factory. So net,
Right.
Definitely,
Right.
India, if you see per capita, it's only 3.5 kg versus global average of
Right.
10 kg.
But Abneesh, when something, sorry to cut you in, but when an event like this happens, when there is a big launch and in an already established space, it is the smaller players that are at a greater risk. But as of now, when you see, at least when you see the price action, it is the biggest player that is getting impacted. Do you see the smaller players being at a greater risk once Grasim establishes its foothold in the market going forward?
Good question. So there are two aspects to it. One is the impact on the numbers P&L, and one is the impact on the stock. So one is, if you see lot of the heavyweights in terms of names have not done well. HUL, you take it, SDFC and Kotak Bank, and across the board, lot of the FI heavy stocks, generally the performance in stock in the last 1 year, 2 year has been weak. Of course, Asian Paints has been impacted and other paint stocks have been impacted because of the Grasim entry. Coming to numbers, if you see clearly, Asian Paints with 53% market share and the kind of hundreds of crores of advertising and full aggression on ground. See, they also get all that data. For example, Grasim claims that their tinting machine is digitally connected. But by the way, Asian Paints dealers also give the data 4 times a day in urban and in rural next day. So it is not that there is any big gap in terms of data and time. So I will say yes, biggest impact negative will be on the weaker players. So for example, Kansai anyway has been a bit weak in terms of market share. It is the number 3 player. Axo is number 4 player. JSW, which entered 5 years back, 6 years back, plus Astral and a lot of the other companies, I would say that for them, it is existential crisis long term if Grasim is able to deliver on the ground. But for Asian Paints and Berger, my sense is long-term Asian, Berger and Birla Opus all will happily coexist because it's a 10% growth industry, plus it's a 65,000 crore market also.
But, okay,
Yes.
fair point. We only have 30 more seconds left on the chat. You've made excellent points. We've been listening very carefully, Abneesh. But my question is this. While Opus and Asian Paints and maybe Berger, they all happily coexist, as you say, the question is the price to earnings multiples. You know, typically, companies like Asian Paints have enjoyed premium, pedigree multiples of 60% and northwards. Could that now normalize and come down? Where do you expect the giants to trade at?
So if you see, it is for a positive event, it is buy on rumor and sell on news. And for a negative, I think it will work the other way around. So last 2 years, if you see anyway, time correction, absolute correction has happened. Asian Paints earnings have doubled in the last 3-4 years, but stock has been largely status quo. So I would say most of the correction has already happened. Of course, next 3-4 months, no big trigger because of the negative -4 pricing and what Grasim actually does.
Right.
But after that, the industry will realize that, okay, all players can coexist.
Right. Right. All right, Abneesh. Excellent points there, but we were short of time. So thank you so much for joining in and taking us through your views on the paint sector there. That was Abneesh Roy of Nuvama Institutional Equities. The time for a short break. On the other side, we put the spotlight on the stock of the season, that is NVIDIA, and the Indian exposure that it has. Stay tuned. We'll be right back.